Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys. Tuesday, we had a pretty big day. Yesterday, I'm already seeing some things that have me a bit like, okay, this is going to continue. So let's go straight into the charts here. So you can see huge move up yesterday in the treasuries. We are giving some of that up, and we're already down 2 ticks as I speak. S&P 500 not happy yesterday. The Nvidia in particular got really hammered. It was like the single largest market cap loss ever. So big things going on. Oil got hammered yesterday. Crazy hard. They're recovering a little bit, or they're trying to start something. Here's gold and silver. Gold and silver also hammered. They seem to be bouncing a little bit harder, erasing most of those gains. Silver not so much, but copper kind of in doldrums. Japanese yen looking okay. Another recovered yesterday, up a little bit today, and Bitcoin taking a hit down to the 5,700 area. So as far as I can tell, there was not any individual new piece of news to drive the flows yesterday. It looks like there was a lot of activity on the holiday that was kind of like preparing for selling off. It really looks like that for some reason these guys were all prepared to sell the beginning of September anyways. And so when they came out the gate, they went and they bought they bought the treasuries and sold their equities, and they just kind of made that switch. So that was the flow. I would call it a general risk off flow without a direct impetus, which does happen. I've never seen one like that was so strong that just was like seemingly out of nowhere. But that's where we're at. Now, the treasuries are giving off some of it. So that's really interesting. That move right there is probably just, the opening range. It looks like that the market makers and everything are set to push this back the other way. The thing that has me like, okay, we're going to have another day is that we're already seeing big icebergs come through. There's 5K at 0.2 half. There's 5K at 0.2. Could be a retrace today. Could be a retracement of yesterday's move, but I would recommend some caution in this situation, because what they like to do in this sort of setup is head fake you. so that first little bit might not be the whole story. I'm gonna wait and see what it does here a little bit. Okay, so anyways, this one. You know what? I should take my armband thing off. We finally go back to the doctor today, so I Shouldn't have to wear this after today. Honestly, I don't think it was really necessary beyond like the first year. This tape. That's been necessary. That's good. That's what. 6K now at 02. All right. What were we doing? Yes, notes. Screwed up my template somehow. That's okay. Wow. Lows. So we have BOC, Bank of Canada rate decision. We have jolts. We have for durable goods. We have US trade balance here in 30 seconds. We have beige book, although that's usually not like a huge mover. Doesn't look like we have any auctions today. Okay, and yesterday was a big move. So when you have a big move the day before, there tends to be follow-up flows the next day. So on one hand, well, let's see here. Let's come to the charts again. When we come onto a daily chart, okay, I don't think that it was quite enough to trigger momentum. In fact, probably some of these momentum players that got in from this, if that drawdown wasn't enough to scare them out, they might still be in it. Okay, but it could be triggering some mean reversion flows is the big thing there. In equities, that might be enough to trigger some momentum for some players. So we've got a new fairly major low going back like what, 10 20 days, crossing a moving average. So there's going to be both momentum and mean reversion flows coming into there. So yeah, so a lot going on. All right, well, now with all that said, we were seeing a pretty big iceberg at 02. It looks like they were never able to get through that. And a little bit of support now at 02.5. They are coming back up. And now let's poke around. Well, actually, okay, so the news. Oh, you know, I forgot to turn my news squawk on. Let's see here. The trade balance was negative 78.8 versus an expected negative 79, so not as bad as expected. I'm gonna need to keep a close eye on the dollar and the Japanese yen here still. Liquidity still looks pretty good here in the micros, but it's not as good as it was. Not as good as it was. Also, am I not showing enough levels? Yeah, why is my market cap falling? Let's do at least 32. a little bummed out that like the 30-year is like it started with the 5. There's nobody traded the 5, and it was kind of like, well, okay, that maybe makes sense. But nobody trading the 30-year is a little disappointing. I guess if I'm gonna complain, I should be trading it, huh? Well, I would maybe do it 5. I would maybe do a 2 30-year spread if it was there. Watch Ukraine unveils terrifying flamethrower drone which spits thermite. I saw that. That seems like I can see where that could be a game changer. Where because thermite can just destroy equipment, right? So that's really interesting. The yen carry trade at Act 2, huh? Wow. According to Goldman, the street is bracing for more than 5 billion of paper in block form during this holiday shortened week. We already had one this morning that's in stocks. So that's not like insane. Like the largest closing imbalances I've ever seen are in like the 1 to 3 billion range. So 5 billion is a significant amount. But it's not like game changing. One factor in what's going on, though. Sure. Should keep in mind. After the 13th, we go into blackout, though. Interesting. Too much there. Citigroup, unless OPEC Plus cuts more than its current level, 2025 prices could average $60 a barrel on slowing demand. But weren't they were talking about increasing output, right? Jeez. Whoa. Okay. So this one is worth highlighting. We got the latest Rasmussen. How come when I open it up like that, it goes so huge? Wow. I can zoom out like that. Okay, cool. So, yesterday, Harris had a big jump. Today, September, or let's say yesterday, she had a really big drop. Pretty significant drop there. Not as low as she was on August 20th, but they are diverging quite heavily on that daily tracking pull. That's interesting. So this is super recent data. It's, it's like every day. It's going to be, and what they're polling like 350 people. So there's going to be a lot of noise in a data series like this. So let's not read too much into it. Then this is probably just like confirmation bias for me, because I can definitely see the conversation online and people's sentiment and so forth, like, has really dropped on Harris in the last week. I'm not seeing it so much in this, but that drop today is could be the start of that. Let's wait for more data points to see where that's going. She gave $25 million to down ballot Democrats. Well, okay, that's not really a unusual or even a large amount for them to do. Okay, so I'm gonna read this one from Stephen Miller. I just want to I'm trying to be like, look, my objective here is primarily to give you guys information that can help you navigate markets and might be useful information for you later on. That includes understanding what's going on in the political world. So Stephen Miller is a policy advisor to Donald Trump and is extremely right-wing, okay? He says, under our system, the Supreme Court is the final word on what is and is not constitutional. If Harris wins, she will end the filibuster and pack the court, which will be the end of the First, Second, Fourth, Fifth Amendments, as government is weaponized against political dissent. So, this is a narrative that I've been seeing, and I haven't seen Republicans hop on it too much, but I think that it's coming. So Chuck Schumer in particular was saying we should really just get rid of the filibuster. I think it would take a pretty sizable majority in the Senate to really kill the filibuster. Which is to say, like, I think you can kill it with a simple majority, but if you have one or two Dems that say, I still like the filibuster, then that doesn't do it, right? So you probably need to have it. I'm not so sure that the Democrats can get a large enough majority in the Senate to do that. But it is worth noting that Chuck Schumer and other Dems that, because he's the leader of the Senate, right? So him saying that is pretty big deal. That is, if they had a large enough majority and they had the ability to do it, they would do it. And if they did do it, and they started to do things like pack the Supreme Court, that would be a pretty huge deal. That would be a pretty huge deal. And on that point, that if it did happen, I think that Stephen Miller is exaggerating the chances of it happening. But if it did happen, it does seem to me that they would go after Second Amendment and First Amendment rights. Harris was straight up saying that, like, Facebook and Twitter should be, they have super power. And it was funny, that clip that's been going around about Harris, that's not recent because she hasn't done any interviews. That wasn't from a recent interview, right? But she pretty much, like, straight up said that these people shouldn't be allowed to just publish whatever they want on these platforms. And she's been anti-Second Amendment too. She said, "Oh, let's just do a gun buyback program. I'll just push it through with executive order." So, does that start to become a larger message among the Republicans could be. Like Stephen Miller talking about that kind of is a hint that maybe it could start to become a thing. Well, through all of that, they did reverse. Did I tell you or what? So that doesn't mean to me that I want to buy here, but it's kind of funny how they will very often, not very often, it seems like almost always on a solid day, they will kind of go the wrong way for a little bit. Try and get you to think that it's going to trend down and then flip. Now with that, we get pretty big, like indecisive cumulative delta, which suggests no trade for us. Not seeing a very clear imbalance in the market orders at the moment. Amir Guyas says hi. How are you doing? Welcome back. You're here every day, man. Thank you for being such a loyal viewer. I'm honestly a little bit like, yeah, I don't want to be like use too alarming of language or anything like. I don't want you guys to be like, oh, Seth is talking about this. It must really be something or something. No, I'm not trying to like alarm you or shock you into action as much as I am giving an accurate description of my feelings at the moment. I'm a little shaken by yesterday. That was a pretty big move up, risk off move. Kind of suggests to me that September is going to be a tough month for the equity markets. You know, there are some beginning warning signs in the economic data. And so I am genuinely worried about like where the market is at. I was looking at so I was you know, I spend a lot of time on LinkedIn all the time because all of my all of the like quant people, if you work for a large institution, you're not really allowed to have like a Twitter account, right? But they're allowed to have LinkedIn accounts, and they're allowed to link to like their colleagues' research and things like that. So LinkedIn is like the place to get that kind of information. And wow, they came back really fast. Holy crap. So I'm on LinkedIn all the time. And, you know, as I was poking around there yesterday, I was realizing that that website has really changed in the last like 6 months. There is way less activity than there was before. There are way less notification, like job notifications than there was before. It's so like the labor market has gone from like this historically easy market for employees to an incredibly tight market for employees, just like that. And that seems really alarming to me as well. Like a recession still seems unlikely to me, but can't deny what's going on. Well, we get jolts today, so that'll be a big, you know, we'll see. I'm going to bet though. Wait, let's see here. What are the estimates? Jolts. Previous reading of 8.18, and the estimate is 8.1. I'm kind of thinking that they might be less than that. This is exactly what the bond market is told. The stock market just hasn't figured it out yet. Yeah. Well, yeah, the stock market. This is the whole argument that I'm making. I'm making a video about this. I don't think that it's going to be the perfect representation of this idea. But because I'm coming at it from a different direction. The next video that I've gotten, I think I've got a script pretty well written out. So now I'm more refining the script, like using GPT to try and make it better and things like that. But the video is about index funds. Like, are index funds evil? Well, no, but there is like a major discussion going on there, which is, you know, how do we make decisions? And we're basically giving all of this decision-making power to index funds, and they don't have, you know, really a very strong incentive to make decisions that help you or me. But the larger idea that I'm getting at here is the efficient market hypothesis needs to die because it's leading to poor decisions that hurt everyday people. I think that the decline in the relative wealth of the middle class in the United States can be directly laid at the feet of the efficient market hypothesis. Companies go and they do things, and then the market rewards them for it, and then they say, oh, well, the market likes it. That must mean that that's the best, most efficient, most effective thing to do. And that's just not the case. The stock market is driven by so many different factors. It's the orders that drive price, not necessarily the fundamentals. I mean, the fundamentals can drive orders, but it's not the only nor even the most powerful thing that drives orders. So I think you're right. There's so much that goes on over here in the equities that when things start to fall apart, they're like the last ones to find out. Because, you know, they're going to have like corporate buybacks and all of these other things kind of holding water for them. And meanwhile, what drives the treasuries here? Primarily expectations about what the Federal Reserve is going to do with interest rates. Well, they started to push to new lows and almost immediately stopped and came back to, you know, like they crossed the line and then immediately ran back. So this kind of looks to me like a market that is trying to coerce people into doing something, and not necessarily a market with a clear imbalance. Although there was a decent change of about 7,000 contracts to the downside. The other day, I don't know what I was doing, but I think I got a little cut on my hand. It seems like whenever I do something with my hands, I'll cut them. It's an ADHD thing, I think. And I really hate it when it, like, what a seemingly innocuous cut turns into a real scab and is probably going to be sore. And it itches like crazy this morning for some reason. I would think that this thing on my elbow, oh, that's super weird. I would think that would itch, but it doesn't. Can't even tell it's there. Okay. Maybe they're looking at it again. Let's see here. It seems like these large bids are being a little active. Yeah. Like there's this big order about 2 ticks away. Where is it at? Yeah, at 0, 0, half. Stacking and pulling. Is that somebody that like really wants to get filled there? Could be. How long has it been doing that for? Yeah. Been doing it for a while, actually. Sellers more active in 6J? Can't tell. I would be super careful about looking at cumulative delta and those sorts of metrics on the 6J because they're not the primary mover and shaker. And you're going to see more in the FX currencies than in other instruments, the cumulative delta moving in the opposite direction of price. Because the people that are doing it there in the 6J are primarily hedging. Right, so hedgers are often going to be against the flow, essentially. So if it's when you have a market that's primarily hedgers in the 6J, then what you end up with is a cumulative delta goes opposite of the move, and it's really bizarre. I don't know if that's what you were doing, but sounded like maybe that's what was happening. So and higher liquidity. Well, and that's another thing is the 6J doesn't have a whole lot of liquidity. It's just a few robots. Not that I spend a whole lot of time looking at the actual DOM in the 6J. Oh boy, somebody on r/day trading is claiming a 5,308% return on investment from their back test. Is it a back test in TradingView? Yes. No, wait, what is this? It's light colored, but that looks like TradingView to me. Average stop size. Well, that's a big red flag already. Not enough data for risk return. That's maybe that's not TradingView, but because I'm not even getting like where's the win rate? Win, break even, loss. Win rate 40.1. Suspicious numbers. Looks a little sus, yeah. Well, no discussion about where to what platform it was. Oh well. To understand millennials, you have to understand that the happiest time of our lives was the 142 days between when Shrek was released and 9/11. Was it really 142 days before 9/11? I don't think so. Why didn't that come out when I was on my mission? Maybe not. Maybe it had been out for years. We're allowed to watch it as missionaries. I remember that. Bit of an iceberg at O2. This guy is still messing around with that order. I'm wondering if I should just increase my filter size to filter him out, or if I really want to keep watching him. Up to big stack at O2 as well. He moved it to O2. Interesting. $1,300 lot at O2. And then kind of like more stacking. So that's probably at the very least enough to kind of cause a little bit of a disruption to that downside testing we were seeing. Of course, if they tick down in it just automatically, that would probably scare them. Want those new headphones to come in. I haven't gotten any updates. If it doesn't come by Friday, then I'm kind of like, because then we're past like 8 days from when I think it should. 8 business days at least, right? So it went on Wednesday. Let's give them 1, 2, 3, 4, 5. Oh, 6. Let's give them the week. Next Monday. 8 days. Okay. So did you see it there at O2? It pulled. 1303 pulled at O2 when they down ticked at O3. I'm seeing a slight imbalance in favor of sellers, but it's a very, very slight. To really get a trade that would be like, you know, really get me excited, I think we're going to have a big change in the flow. So I'm just not sure it's coming. Especially if we got Bank of Canada in 45 minutes. Like, I don't know about that one. There's going to be an iceberg at O2 half, I guess. Okay, they do take out O2 half with about just shy of 4,000 contracts. Is a pretty big order at O1 half. Okay, they go to it as well. Not a lot of resistance at O2. Range market, you think? Yeah, I mean, I do think there's a potential for something to happen. Like, I think we would need a big change in the flows, but you know, I'm definitely getting activity that suggests something is going on. It's just not activity that would really tell me that there's like some imbalance coming. So durable goods and factory orders tends to be a mild to medium sized mover. So it's a flow to consider. So there's always a possibility that like, you know, a number like really underperforms, outperforms, or whatever, and shifts everybody and causes a move, but probably not. The biggest things that we got are the Bank of Canada rate decision and jolts. Jolts is a very important number right now. 10K stuck at 0.2.5. I'm gonna wait for the IB. Well, is your IB at 0.1/2 still? At least that's what mine is. I mean, it does seem like this is probably something that will break that initial range. I don't know if it will go much further than that. You have it at 0.1. Seeing some selling in Bitcoin. It's just to the lower end of the range, but there is some selling going on there. I'm not seeing too much in the Japanese yen, but there is a move in the euro moving up and the dollar coming down from 101.7 now to 101.6, let's say. So about a 10-cent decline in the dollar after a 10-cent rise before the session. So they're kind of coming back to you know, they're testing the range, let's say. They're testing the range over there in the dollar. So that's also another sign. I don't know if it means we're going to break down lower here in the treasuries, but I think that that's also a sign. Although typically dollar moving down typically means treasuries moving down, right? No. Treasuries moving down means yields up. That tends to make people buy into the... Wow. Okay, so somebody just pushed the dollar over the edge there. Wow. So that's interesting. Push the dollar over the edge, and now the treasury is sitting there looking at that 0.1. And I'm not seeing... the big order that I've kind of been seeing, you know, messing around here is at 0.0/2. Oh, he moved it down. Now it's at 114. So that's probably is just the liquidity that kind of gets rolled out in front of everything. Okay, pretty big iceberg at 0.1/2. So this is really tempting to me to, before she goes, absorb at 0.1/2 and hope for a breakout here. But that's a 50-50 trade in this context, so I will just continue to be tempted and, you know, feel bad for myself if it goes without me. I have to say that there's a pretty healthy amount of trade back and forth here, though, isn't there? It's not really going anywhere, but you getting good volume. Icebergs all over the place. Much better market than it was last week. If I were on Trump's campaign, I would recommend. Oh, okay. So yesterday, Trump was doing an interview, and somebody asked him about interfering in the election, and so he just used their language to say, like, interfering in an election where we had the right. And so people are saying, "Oh, Trump admitted that they interfered in." No, I mean, he doesn't consider it like interfering, right? Obviously, but liberals are trying to run with it. So I think that's, I'm not just saying that one to be, like laugh at liberals or anything like that. That's the one that, to understand their mindset and the things that they're saying, you are now going to have to remember is that in their minds, he admitted to interfering in the election, right? Like, I've been seeing people say, "Oh, this could be admissible in court." Probably not. At the same time, I don't know if it would ever come up or even matter, right? Like in court, it's going to be like, okay, like the biggest one is the fake electors scheme thing. Was that in Georgia, or was there more than one case on that one? I can't remember. And so this whole thing is was what they did considered fraud? And I can't really say. I think it's kind of up to the courts, and it's probably going to be something that's like possibly even going to go to the Supreme Court for the Supreme Court to decide and so forth. I kind of think that if you are contesting the election, right, if you were successful, that is to say you were able to prove that there was fraud, and after proving that fraud, it changed the results, then that would mean that you would get different electors. And so having an alternative slate of electors ready to go would be prudent. But perhaps there were things that they did. For instance, there was one person that tried to get into the Capitol by saying that they were elector. They were on the alternative slate of electors. So does that constitute fraud and prove the whole? It seems like a stretch to me. But I don't actually really know what the law is going to say on it, right? But it comes down to, like, what is the crime? Did the thing that happened fit the crime? So him saying, "Oh, it was interference," and it doesn't matter. What matters is what he did and whether it meets the legal definition of a crime, right? Do you think they'll send him to jail on the 18th? I don't know. That's a tough one. So what's going on with that one is that Trump is saying that the judge is biased and that this should be moved to the federal court. I do think that the overall case is kind of BS. Like, I think that his conviction stands a very good chance of being overturned on appeal. But in the meantime, will they try to jail him? On one hand, I think that would be an incredibly big misplay on their part. I do not believe that the average American believes that Donald Trump did something worthy of going to prison. And a lot of people would look at that and say, well, this is shenanigans. They're just going after him for political reasons. The whole thing is made up, trumped up charges. He shouldn't be going to jail. This is, unfair. So if they did put him in prison, I think there would be a really huge backlash. So that alone kind of makes me think that they won't give him prison time. But on the other hand, I don't know about this judge, man. This judge, if anybody would be willing to do it, it would be this judge, you know? So prison outfit would suit his hair. I guess I don't think anything suits his hair. Listen, I could have hair like Donald Trump, right? I could have done that. I could have said, let's just let the back grow out and we'll do this whole thing on the front. You know what? It probably does help him. Having the ridiculous hair is probably better for his image than to go bald like me. But I think it's weird. Well, there's a lot of noise here at 01 half 02. Haven't gone for it yet. I got this feeling it's just because it's down there. It's like, oh, something's gonna happen, but nothing's happened. Should just go bald and grow it. You probably would look pretty good with a beard, yeah. Or I've seen those pictures where people like AI'd it and it looked pretty good, yeah. I don't know though. I kind of feel like that bald and a beard kind of makes you look generic, you know? Yeah. Like would Tim Pool be as popular as he is if he didn't wear the beanie? I'm not so sure. You were able to end yesterday green. Good job, D. I was a little bit worried. It seemed like you were pretty active in a pretty dangerous area. He should start lifting you. He's probably never lifted a muscle in his life. There's a good thing that, so the thing that kills you is when you stop moving. Oh, wow. So there's upticks. Okay. I don't understand how Tim Pool is popular, and I used to be a regular viewer of his. I don't either. I don't understand how most people that are popular are popular. I honestly think that to some extent, there's just luck. Like, you know, there's people that they have really, really good content, and no matter what, they're always going to be up there. There are other people that they have really, really good content, but like their niche is really small, and there's all of these. So there's all of these people that are kind of on this threshold, you know, like they could be famous. That the algorithm could decide to make them famous, but the algorithm can only choose to make so many of them. And so there's all these people that are kind of on that level and maybe deserve it, and it picks them up, you know? And maybe Tim Pool was one of those, you know, where he was just a little bit enough on the edge, and then it takes off and he does well. It's really weird to me that how the Donald Trump supporters have gravitated to his podcast, because he was always kind of like a centrist Trump skeptic. Like, I just don't understand it. Content creators who criticize mainstream media while building their entire career off simply reading their articles is a little squiffy to me. Well, and that's another thing though, is anybody that has built their following on basically criticizing mainstream media and they've become popular is like really impressive to me, because it really seems to me that on YouTube in particular, that if you say anything that kind of goes against the narrative at the time, that you just get crushed, you know? Like if you said anything about COVID or the vaccines during that time, you're on the naughty list, right? Like, not much of a range going in ZN today, huh? Well, I tell you what, it sure seems like it's playing with us, doesn't it? Like again, when they were down there, I was like, it really feels to me like something is going on. No, nothing happened. Now there is that big order, but that's just 2 ticks away. I'm going to change my filter So I don't see that anymore. There's a degree of avalanching with YouTube audiences. Like there comes a point where it just doesn't care and watches as a matter of, yeah. Well, I think there's so just as an example, because we've gotten up to 15,500 subscribers, which is like so much more than I ever thought that we were going to get. And it seems to me that in that, I would maybe say more 16,000, but like 16,000 to 25,000 range is typically where I see creators go viral. So like, are we still like, is it still possible for us to go viral? Well, maybe, but if it did, I don't know if it would necessarily be a good thing, because I'm not like, when it comes to my individual videos, they're not necessarily like consistently about the same thing all the time, right? Like I have one video coming out about a chair. I have another video coming out about index funds, right? So if people come in and the chair video goes crazy, then do I just have to, you know, review office chairs from that point forward? Like, I still want to do it because I think that I got some good information for people, and it's good to have somebody that's like not a chair salesman to review it. But, you know, I'm a little bit nervous about, I put that one in, that's the video that does really well. I would rather it just be in like it does okay video, and the one about index funds does well, because then it's like that's something that I can continually make content about, right? Because if you go viral, but then the content that you're putting out after that isn't anything like the thing that went viral, then it probably doesn't help you so much, right? And I'm not that consistent in that area. Seems like the market is content trading in this range. Well, it's not even that. It's just like, it doesn't look like that there is a huge imbalance, and that the people that it does look like there are people that need to get something done, but that they are more than able to do it within this range. And so they haven't had to push it out of their range to get, you know, more liquidity. But again, we have Bank of Canada rate decision in 30 minutes, and then we've got jolts. And so that's something that could keep us range bound, right? I saw that somebody posted a video from Freedom Tunes about Kamala Harris, where it's like they ask her a question and she just kind of laughs, and then it's like, I'll fix it, and everybody claps about it. I saw that and I thought that was funny. That is quite literally what she does. Oh, what's this? Namros has some stats for me. Wow. No. That's some fuckery right there. 86% win rate. Average winner larger than average loser. Largest winner larger than loser. That is very sus. I don't know, man. Oh, well, okay. So the first thing that I see with this, though, is that it's only long trades. So that is in and of itself. Also, I'm not able to see the time period that you tested it over. You have 1,000 trades. You might not have enough data. Going back to 2007? That's a problem, though. That's a problem. You traded for how long is this? Let's see here. If it's 2024, you went back to 2027, then that's 17 years. So you're telling me in 17 years it took 1,000 trades? Is too selective. That's a really strong sign that it's curve fitted. Now it's on a daily time frame. That makes it maybe a little bit better. Still, ones that only go long are a little bit like. Do you have? How come it doesn't show like? Oh, this is TradeStation. That's why. I was like, where's Sharp ratio? Average trade is 6 days. And it scales into. Well, so that's another thing. Is like when you this gets into such interesting stuff. Is that like scaling in and out of positions and how you manage the trades that you're into and everything completely change the performance, right? If I'm just trying to see like what's a good entry signal, well, part of the thing is that there's not that much edge that you can really build on just the entry signal, at least on short time frames. Now you're doing it on a daily time frame. It's better. But even then, how you manage to trade maybe actually matters more. But the issue with in the back testing is that every one of those things is like another factor on top of that. And so I really like to be able to say like, okay, I'm just doing the entry position and a simple exit kind of strategy and stuff, and I'm only doing one contract. How does it do? Then I add all that stuff on top of it once I know that that's good, right? But if you were going to, so the way that this typically works in the industry is you're going to trade a bucket, right? You're going to have like a universe of tradable assets. You're going to watch those assets, and then when one of them triggers, you're going to go into the position, right? And it's holding those positions when you get a situation where you're able to hold them for a really long period of time and all of that. It's that's where like high Sharp ratios and the things that really make those kinds of strategies valuable and worth creating funds over kind of come from, right? So when you have one where you only go long, kind of hurts it, because now you're not, if the S&P 500 is down, for instance, then you're not going to perform, right? Because you can only take longs. So, I would like to see it long and short. You get good results on the S&P 500, then you turn around and you generalize it and use Python to trade it against a bucket of assets, right? And then trade it that way. But even then, with the sample size that you have and the percent profitable that you have, it really screams curve fitting. Really screams curve fitting. Well, you say it performs better in those conditions, but that's because like you're making money on the pullbacks, right? I think it's us. There's a couple of things that I would test those things, right? You like add the short trades. Okay. Those sorts of things. Anyways. And unfortunately, I don't know how many like parameters there are in it. Like that's one of the things. So like I say, okay, so these are the kind of results that look curve fitted to me. So then I would be going back and I would saying, well, I have like 12 different parameters that I can change in here, and I, you know, hand selected the best ones. Oh, actually, I did curve fit it, right? Versus it's a really simple thing and there's only like one parameter in the whole thing. Then that's a different issue. And then it really is like, well, wow, how did you get such a high win rate then? Because a win rate that high with risk reward of pretty much equal is, and on a daily time frame. Like you only get those kinds of win rates like doing market making kind of stuff. So like on a daily time frame, that's suspiciously good. There's lots of different market classifications. Yeah. Then you're probably very much run the risk of curve fitting. So what you got to do in that one is you really have to have a training and a test data set, right? You take like 5 years and you train it on that 5 years, and then you see if you use those, if it works over the next 10. Here in Chwala, hello, good morning, how are you? New name, welcome to the stream. So anyone was gonna say, I'd love to see your reaction to the video I shared. I've already seen that video. I saw that on TikTok. I thought that it was a pretty good, like that's how I feel she sounds. Is you ask her a question about anything specific, and she's just like, yeah, we're gonna fix it, and laughs in really weird places. It's just like there's no substance there. I have to say, like on the political side right now, in my view, the Kamala campaign is faltering big time. I think that like the things that I'm seeing come out of the Kamala camp and everything look like panic to me. Like one of the things, just look up Freedom Tunes. I'm not gonna go find. I'm too lazy to go find the link. Just search Freedom Tunes, you find it. So like one of the things that's been going on is Donald Trump went to some sort of wreath laying ceremony with people with family members who lost people when we pulled out of Afghanistan, I believe is what it was, right? And you know, they took pictures and I guess even kind of like pseudo filmed a commercial there. And this is like one of those rules that like all the politicians do it, but like apparently it's technically against Arlington's rules, and they say that an employee told them they're not allowed to do that and that there was a brawl. Now Donald Trump says that there wasn't a brawl and that it's fake news and whatever, but the Kamala Harris campaign has been seizing on this. Like they've really gone like all in on this particular thing. She was tweeting about it. She was doing all of these other things, right? And when she did that, what happened was all of the families that were involved started making video responses, just absolutely trashing Kamala Harris. So even if you say that she's technically right about that they shouldn't be doing that at Arlington Cemetery, I think that overall the impact that you get from having what do they call them, 5-star families or whatever, like attacking you is not good, right? So I would say overall it's a lose. Gold star, that's right, yes. Having gold star families attacking you is not the best thing to happen to a presidential candidate, right? And yet they continue to push this narrative, right? that to me seems desperate. That like is that really what you think is the best weapon that you have in the campaign right now? That because this happened like 2 weeks ago. Like it happened 2 weeks, it kind of like simmered, it didn't really pick up that much traction. People argued about it, they forgot about it, and then Kamala tweeted about it and brought it up. That if that's the best that you've got, that to me seems like panic. Well, maybe not panic, but that's not something that you do when you're like comfortably ahead and all of these sorts of things. Like they're pretending that they are. Or like the debates. This whole thing about Kamala wanting to change the rules of the debate and saying, we agreed to a date, we didn't necessarily agree to the rules, and then ABC having to say, no, these were the rules, they were set, and we're not changing them unless you guys agree to change them. Will she like pull out of the debate? Like, again, if you're like super confident, you don't do that. If you're super confident that you'll do well in the debate, you don't do that. And then just when you look at what she's talking about, how her messaging is falling and so forth, they really look to me like she's just flopping around and like a fish with its head cut off. Like it doesn't look good for her to me. What is Gold Star? Gold Star is a family who lost a family member in military service. Their son was killed in service of the military. Dan Blazarian? I'm not quite sure. She is without question the most inexperienced, least prepared presidential candidate ever in history. I mean, if she loses, and at this point, like it's after Labor Day, so I can start to make predictions, and I really think that she is going to lose. By the way, we did break the upper end of the range, but let's not get too excited yet because, again, it has been range bound and we have stuff in 45 minutes. So that could just be like, again, like, let's push it up here. You all get long and then they cut it back down, right? I think that at the current time, she's likely to lose. And when she does, that's going to the narrative that's going to come out of that is, this is why you have primaries. This is it vets the candidates. It helps the candidates build their organization and get their organization going. And you can't just go and handpick somebody out of the crowd and put them up there and say, well, we're all the experts, we're going to do everything, and you just have to look good for the cameras. It doesn't work. Yeah, is it 8 minutes? Yeah, 3 plus 5 minutes. I also think that what you will probably see is a snowball effect. Like, if you get into mid-October and you're still getting all of these polls with Donald Trump ahead 2 points in Pennsylvania, like it's mixed, but even with Donald Trump up 2 points, because Donald Trump tends to perform better than his polling. That's just what it's been in the last two elections. You will start to see people jump ship. I'm already seeing people jump ship. Like, there are people on CNN and all these other places. They're watching her, and they're not going along with it the way that they normally do. So I think that there are a lot of pundits that they see this and they say, well, I'm not willing to risk my reputation on her. Is what I'm seeing. Do you think that no, the Federal Reserve is going to cut interest rates in September by 25 basis points? Oh, you know what? We never checked that. Let's see what the market says about that now. That's not what I wanted. I wanted markets, interest rates, rules. That much. Wow. Sorry, where's the thing where it says the current rate? I think the current rate is 5.25 to 5.5, right? So they're saying 62% chance, or, well, yesterday it was 62% chance of 25 basis point cut. Now it is a 59% chance of a 25 basis point cut. 40% chance of a 50 basis point cut. Well, we got 15 days. That means, though, that there's plenty of room for the treasuries to move around in the next 15 days, essentially. I don't think that they're going to do 50 basis points, but let's see the non-farms report this Friday before we decide what it's going to be, right? Probably after that, they will consolidate on what they think it's going to be. And jolts could be a key deciding factor there, too. Are getting a decent rise in the Japanese yen as the treasuries have floated up here. I'd say there has been a decent, like move in cumulative delta along with it, but like it's not a huge move, right? -3 to 7, so 10,000 contracts changed to bring it up to there. That's a pretty big move for them to get up to there, but it's within the range of the session still. So, that's why, again, that seems like something that they break out and then they kind of meander back the other way after they trap all these people. How do you guys know what to check these kinds of reports? Not just the technical aspect of only ever watched patterns. Well, lazy. That is exactly my big pet peeve, man, is that we teach retail day traders and we only tell them about chart patterns, and especially for intraday traders, chart patterns aren't really very useful. When you go and you do back testing on intraday data, very, very difficult to get a good system off of that. There's just the market on an intraday basis is really, really random. Really, really random. So things like that, about what's going on, like their reports and sentiment and all of these other things, institutional strategies are really super important for a day trader. And retail traders don't talk about it. Now, the good news is that all you got to do is just watch the market. News Squawk, they have a good, if you go to newssquawk.com/blog, they have like a overnight synopsis where they say, here are all of the things that happened overnight, right? Zero Hedge tends to have an okay synopsis at the end of the day where they show you what all of the different markets did and talk about perhaps why. Basically, you just have to come in, watch the market every day, and read the news to see what were the different drivers of flows that were involved in that day. And as you do that, you'll get the hang of it, right? There's a monthly cycle. So like, for instance, the non-farms report is always released the first Friday of the month, unless that first Friday is the first day of the month, or it's a holiday. So I always know when that's those big numbers tend to be at the beginning of the month, for instance. Right. You go through that a few dozen times, you get a pretty good hang for like what the ebb and flow of a month is. After you've been trading for a few years, you get a pretty good idea of what the ebb and flow of the year is. Although the only major thing that you got to know is that summer tends to be slow. January through March, May-ish tends to have big moves. September, October tends to be risk adverse. Like some of the worst sell-offs happen during that time. And then you kind of get a year-end rally going into December until Christmas, and then the period between Christmas and New Year's is dead. Don't trade that. Okay. What you're trying to do is you're trying to build intuition, which means being able to understand and make decisions and stuff without having to, without using conscious logic. And so I can see a situation and get a quick impression of what I think is going to happen. So here comes the Bank of Canada news. I think that you're going to see a big move off of this, but one that doesn't necessarily matter because they're not going to surprise them. So it is a cut. Yeah, that's interesting. No orders at all in the treasuries. So anyways, you're trying to build that intuition. So how do you build intuition? You process data. That all of that data is, yeah, that wasn't a surprise. It was just the 25 basis point cut like they're expecting. I kind of thought that there's usually still some movement, even though that news never surprises, is what I was saying. Anyways, you're taking that data in, and as you do it and you process it, your brain is going to go and look at it and it's going to say, based on all of the other situations that I've seen, how does this new piece of information fit into it? And do I need to adjust my model? And there's brain cells in there doing all of this stuff on their own without you even consciously realizing it, making connections, growing. It's like building real physical structures in your mind. So as you come in and you look at the right things every day, you will build that intuition. But it takes time. It takes a lot of data, and it requires you looking at the right data. Because it's garbage, just like if you're training a ChatGPT, garbage in, garbage out. So what's happening is retail traders are building intuition on intraday chart patterns, which is mostly garbage. Mostly garbage. That's why my video about price action, I say the price action is garbage. It's not effective. It doesn't work. You need to be looking at the right things. And one of those things is what were the economic releases? What was the expectation? What was the actual number? How does the market move and react to that? And build your intuition on that, right? And retail traders will go and waste years and years just looking at charts when they could have been building intuition on things that actually matter. And now you're how many years behind? And that's my biggest pet peeve, is that what the retail day trading industry teaches people is basically just leading them down the drain. Okay, that was probably a bit too much of a pontification because you guys asked a bunch of different questions. Have you seen Eric Weinstein clip explaining that? Yes, I have seen that. I think it's a little bit too conspiratorial, but so if Donald Trump wins the election, which I think at this time he is likely to, there probably will be a lot of wrestling with it, which is to say, there's going to be some liberals that try to concoct or enact some sort of elector scheme, faithless electors scheme, where the electors don't vote what the state voted. There will be court challenges where they say that he can't legally hold the office. So there probably will be serious legal attempts to prevent him from getting into office. But I don't think they can really stop him once he's won the election. So I also think, though, that Eric Weinstein has been like, what's happening is you're using a model. Like, again, this is intuition. And if your model that you're kind of basing everything, the lens that you're looking at everything through is that there are rich and powerful people and they control everything and yada, 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 which is not untrue, but it's a little bit overly simplistic, right? Then you're going to come in and you're going to say, well, if you're doing something that is against those powers that be, yeah, you're going to have a hard time. But I think that that's not exactly the situation. What we're seeing across the globe in all countries is deglobalization. And not just deglobalization because of populist uprisings and people want to go the other way. Deglobalization because COVID exposed vulnerabilities for countries, and they have, well, combination of COVID and Russia has exposed supply chains in a way that they now realize that they cannot rely on globalism in the way that they did, and that they are going to have to build up local industries more than they have. And so the establishment is not so much against Donald Trump and what he wants to do as you might think. If Donald Trump really seriously tries to push big tariffs, that could be a problem. Okay. I don't think that he's going to go full ham with it. If he goes, I hope not, because tariffs do tend to be economically damaging. But they do have a place. Like, there's always tariffs. There's always some tariff. Okay. So you can't say, like, all tariffs are bad. Right? They're a tool. They have a time and a place. You got to be careful with them. Dangerous tool. Right? What else is it that he wants to do? I don't know. That's. Oh, what I was gonna say is, when you look at Silicon Valley, there's been a huge shift towards Donald Trump. Like, a lot of people in Silicon Valley have gone in and said they didn't like Biden, they don't like Kamala, they think that those Democrat policies are going in the wrong direction, and they're supporting Trump. And there's been a huge shift. I kind of wonder about this thing where Mark Zuckerberg, sent a letter to Congress saying, actually, yeah, the Biden administration did coerce us and force us to take things down. Basically said, you should take this thing down, or, we're going to do this to you or that to you, and kind of try and coerce people into squelching people's speech. Is that because he's worried about what Trump will do? Maybe. Donald Trump is kind of still mad at Mark Zuckerberg for the money spend that he did. And Mark was like, well, I didn't think that it was just going to objectively help Biden. I kind of wonder if Mark has had a change, that he is kind of more pro-Trump than pro-Harris as well. Okay, so, like, the world is shifting. And the world is shifting in a way so that the centers of power are not all against Donald Trump. Because a lot of people are realizing that had to happen. How do you feel about the national debt? We could talk about that in a second. So basically, there's a lot more to news, not just watching non-farms and YOLOing it. Yeah, exactly. When you make an investment, do you take into account the PE ratio? Yes and no. So a PE ratio is an important factor that you're going to look at to differentiate stocks, because you're going to have stocks that are low PE ratio and high PE ratio, and you can kind of like cluster them. They're, like, you could run a machine learning algorithm and classify them, make different classifications of PEs, right? But so PE ratio gives you a good idea of what kind of stock you're investing in. Are you investing in something because it's a slow, steady, consistent winner? Or are you investing in something that is expected to have a lot of growth in the future? And that's the value of the stock. But the PE ratio on its own is an ineffective measure to compare investments. Like to say, okay, here are two similar investments. Which one should I get? I should get the one with the lower PE ratio because that's cheaper. Or no, it doesn't work like that. If you want to do that kind of a comparison, then I would look to other related and similar measures. The most prominent being forward price earnings growth ratio. So you take their PE ratio, that is the price to the forward projected earnings. So like what is the analyst's median expectation for their next earnings, right? Price compared to that, and then divided by the expectation of growth over the next year. Now that's the peg, and some platforms have that built in, although there's all this nuance around, is it last earnings or forward earnings and all that sort of stuff. Okay, those things matter too, but peg ratio is a better way to compare. Say this stock is cheaper than this stock because you're balancing it by growth. Okay. What do you think about the national debt? So the national debt is kind of a sleight of hand for people, to trick people into giving more of the economy over to the government. So think about the economy is like a big water tank, this huge water tank, and on top of the water tank you have a bunch of faucets, and at the bottom of the water tank you have a bunch of gates that you can open to let water out, right? So the amount of water in the tank is going to depend on how much water you're putting into the tank and how much water you're taking out of the tank. Okay. And this water tank is the money supply. Okay. When the government prints money and spends money that they don't have, basically they take out debt for government spending. What they are doing is they're putting more water in that tank. And when they tax, what they're doing is they're taking money out of that tank. Okay. So why is government spending like a high deficit bad? Because it means that you're putting way more water in the tank, and that's likely to cause inflation over a period of time. There's a certain point at which that starts to create inflation. We've been lucky for the past 10, 20 years because there's a lot of deflationary factors out there, right? Like populations declining and low birth rate and all, and like moving into the digital age and all of the huge technological improvements that we've made. Those are all deflationary things that tend to make things cost less. And so we don't experience that huge rise in asset prices until COVID, when we printed even more money, we disrupted supply chains and everything else, and we did fiscal stimulus too. Right, then you got the inflation. Okay, so when they come out and they say, hey guys, we have a huge deficit, so what we need to do is we need to raise taxes. Okay, cool. We'll raise taxes. We'll have a lower deficit. But like the whole thing is like, how much of that tank, how much of the water in that tank is the government responsible for? Is really the question that you're asking. Because that is not very effective money, right? That's money that's going to government and government contractors and employees on things that tend not to create a lot of growth. If they created growth, the private sector would do that. So almost all of the government spending kind of goes into less productive things. Now, there are usually things that are necessary that like nobody makes money from, but like the society at large still benefits from, and so they're important to have. But growth, they do not, right? And so the larger percentage of that tank that the government is responsible for, the lower your GDP growth is going to be overall. Right? That's why the measure that you should really be looking at, is government outlays relative to GDP. That is, you're looking at all of the spending that the government did that year as a percentage of the overall economy. That needs to go down. And all of this wrangling around about taxes and everything is a distraction to distract you from the fact that the government is taking up a larger and larger percentage of the economy. You see, those modern monetary theorist people, they understand this. They understand this. Oh, if the government is printing a lot, then all we got to do is take a lot out with taxes, and then the tank doesn't overflow. Well, true, but then that also means that the government is responsible for a larger portion of the water in the tank. So the end result of this policy is that government gets bigger and more powerful. Are you going to trade good jolts? We'll see. We got 15 seconds. I don't have my Dom armed. Okay, so I'm not going to trade the initial jump. Ow. Okay, so it was a miss as I thought. Oh my gosh, I just crashed financial juice. Interesting. So I'm kind of questioning if the micros moved far enough, but I think they did. Should just note that there was kind of this sweep through here, and 3.78 kind of seems to be the first line. Are high frequency traders the biggest market? No, they're mostly market makers. Oh, you were long, but it was on demo. That's it. Well, it ain't stopping there, man. So, to review here, they got 7.673 million versus an expected 8.1. So about 400,000 less than the market was expecting. I feel that the market tends to overreact to jolts because Powell made this comment about it, that he was watching it, and all these sorts of things. So you might get bigger moves than what it really implies. But that big of a miss, that's a pretty big miss. This is a pretty big miss. So the question is just, where can I take it from? Okay. So don't see anything too interesting at right there at the 17.5. I just need to remember it was 378. Getting to the top of a pretty big gate, yeah. Well, let's see here. We didn't reach the high, did we? Oh yeah, no, we did. We did. But did we breach? Okay, they came just a little bit shy of that. Okay, so I'm gonna try it on sim here, because I see them dinking around with 16. The first thing that I'm noticing is that like the next major line in the sand was more like at 2020 half, and they didn't quite get there. So they came back to this 16 and they're toying around with 16. So that's why I put some orders there. 16 is halfway, half of a handle. So should have done 2 or 3 contracts first instead of like waiting for one to fill and then putting another one out. Because they're not really hitting into 16. Bostic. No, I don't see that. Oh, well, actually, I see it. I must have missed it when Financial Juice crashed. Bostic is speaking. I am not quite prepared to declare victory over inflation as risks remain. Must not maintain a restrictive policy stance for too long. Fed is in a generally favorable position. Soft landing for economy may be within reach. There are some things in there that could maybe put a little bit of, I don't know. Is that like objectively a sell? I'm kind of leaning towards a little bit of a sell, but not like super strongly. Now it's doing a little bit more like what I was expecting. Is like it might rotate around it. But what I'm doing here is if I put myself in a position, you start to view the data a little bit differently, and it gives me an idea of how on I am. So the first thing is that finding a straight up spot is looking a little hard. Okay, now they're back to my kind of like initial line. You also see something at 11. Nick Timmeros, this is a labor market that isn't as tight as it was before the pandemic. Job openings declined further in July, and the ratio of job vacancies to unemployed workers dropped to 1.07. It was tighter before the pandemic, really? Well, one thing is that probably, the tech industry is still really hurting, and others are probably just fine, right? Okay. Yeah, ZF would react the most because short-term interest rates are going to be essentially more impacted by what the Federal Reserve does next, right? Like, it was only 5 years, right? Versus the ZB, you're talking about what's going to happen over the next 30 years. So, like, the interest rates changing, that does matter. But it also kind of doesn't matter if they're like immediately going to bring them back up or something like that. So the result is that the 5-year and the 10-year can be more reactive to the news in some cases. Also, you're seeing steepening overall in the spread. So that 5-year is going to go further. Okay, so They went through me there at 14, so that's not looking like too good of a pick yet. Now that could be Bostic not helping, right? Did we had core durable goods too, right? Core durable goods. It's pretty much in line. Okay. So in line, miss. Yesterday was a huge move up. That does favor going long. I do see a little wall of liquidity right here. So I am going to take a little risk here. See if they're able to gain the upper hand on this and start pushing up again. So then why didn't I don't know. Generally speaking, you should see ZT react as well. But so here's one way of looking at it is look at the spread itself and not like the number of ticks that it moved. So if you look at the 2 and 10-year spread, it did steepen, which means you buy the 2-year, you sell the 10-year in the ratio that, the spread is, which is 4-to-1 right now, I think. Yep, 4-to-1. And, you would have made money. So that means that the 2-year is going up, but because of the size of the instrument and stuff, it might not seem like it went up as much from a chart. That's why you want to have those spread charts. But like from an absolute dollar value, when you look at the dollar per tick and you're trading like 4 of them and everything, it actually was more. Another one would be like the effect on the 2-year is okay. The ones where that effect where like they're really, really strongly affected by like the data and stuff is those bills. Like if you look at the bills in the short-term interest rate futures, you should see a pretty strong move up there. As you get into duration is higher when they're lower rates and when there's a long time, long expiry, or whatever you want to call it. So with rates up at 5%, that decreases duration a lot, but the duration of those is going to be higher than the other parts of the curve until you get to the part where the 10 and the 30 where there's enough time where it makes up. In other words, duration looks like, I haven't looked at a chart like this, so I'm kind of guessing a little bit, but I think that if you look at duration, and this is like bills, and this is like 30-year, so duration being a measure of how much they react to a change in interest rate changes the value of the asset. You're going to see them kind of go like this, and you're going to see a smile like this. So these bills, and the 2-year kind of sits, this is like the 2, 5, 10, 30, right? A little bit of fight here. Those bills are a little bit, but then when you get the 30-year, it's like the change of a rate over 30 years, like really whips it. So I got two things. One is there's Bostic. Well, three things. Obviously. The first thing is that the Jolts number was a big miss. I think that's pretty important. We did have Bostic kind of saying he's not quite ready to declare victory, but also that they're in a pretty good spot. So I think that one's kind of a wash. We'll see if the market agrees with me on that one. And then we kind of have some like a longer term resistance above us. So they shied away from really going for like the big levels above us. We'll see if they go for it or not. Well, I'm 2 ticks up right now, but so far I'd say that this trade hasn't gone too well because I'd had like 8 ticks against me. So at the very least, well, I don't know. In this kind of a situation, I think that you kind of have to almost expect at least 10 ticks of adverse excursion, but I still would prefer to keep that down. Okay. Seems like also that this 14 area is kind of like the center of the liquidity hole at the moment, so. Yeah, they're able to trade through these prices pretty easily. Not a lot of liquidity being put up on either side. So I think that the way that I deal with that is take the trade later, right? But I did wait, like what, 10 minutes? Yeah, 10 minutes after the news. Ouch. What am I seeing here? It looks like cumulative delta. You know, like there's the initial jump. There's like the initial jump, but then the flows since that have been long despite us falling back into this hole. There was maybe some signs of a sell there, though. That was like the most significant sell we've seen so far. So I'm keep an eye on that. That's got me on the edge of my seat. Do you see? I do not believe we'll see a 50-point cut, but there's about a 40% chance of it happening right now. And we've got a non-farms on fight that's going to have to play a big part into whether or not we see that. And with what we just got with Jolts kind of suggests that, the increased chance of it happening. Maybe it's now more like a 45% chance of it happening, right? I shouldn't say it like that. We've moved up on the Jolts, so there's probably more like a 45% chance of it happening now, whereas before it was 40%. Well, I tell you what, S&P 500 has been like all over the place since that move. Pretty unclear what the S&P 500 thinks of that Jolts number. They seem to be wrestling between, oh no, does this mean that the economy is going into recession, and oh yeah, easy money. They're not quite sure which one is going to carry the day. I'd say overall it's been tilted to the downside in the S&P 500. But let's see here. When the news came out, we were 55.46. The yen carry trade is. But do you hold a yen carry? Okay. So I feel like that since we had that big blow up, like what, 2 weeks ago, that the yen has been pretty quiet. Like I've kind of been thinking they must have just unwound it all, because now it's just kind of quiet and normal over there. Well, I'm seeing some attempt to build some upside here, but so far it's just not really taking. It's like you get a okay bid at 13. I mean, there's that big bid at 12.5. So that's good, but that could just pull. Yeah, of course, 11.25. That's not good. But they were building good bids, and then they got sold into. So now it's just a 10-year. So probably just needed to give it more time. Like, I'm thinking I shouldn't, I waited 10 minutes. I'm thinking, I should have waited the full 30, 40 minutes. If not, until it was back up at 16 or something like that. Let's see here. Oh, I didn't notice, but Bitcoin took a little bit of a jump off of the jolts, and they've completely sold that back. So no, I just feel the repercussions every time they're hinting at rate hikes in Japan. Isn't that why everything tanked yesterday? I don't know about yesterday, Eric. It was definitely the case when we had that big washout, in August, more towards the beginning of August. But I think that yesterday had more to do with a general risk off September type of play. Because the Japanese yen didn't really move yesterday. So why would it be because of that? Why would they have waited to sell it 2 weeks and then started selling everything? So I'm paying close attention to how many contracts does it take to move it when we tick up or down. So just as an example, at 12 and 12.5, there was 751 and 269 respectively. So there appears to be still a bit of a hole, at least until 14.5. Well, there you go. In other words, it doesn't take a whole lot to pump us back up there, right? So I'm not really a huge fan of that because of my position. My position should be at the bottom of that hole, and it's not. But it also means that we're not to the point where I really should give up on it, per se. Especially if cumulative delta is rising or flat. But this time around, a little bit of pushback at the 13 and 13.5. So that's not particularly encouraging. Because what we want to have happen here is longer term flows start to come in long based on their changing expectations from the JOLTS report that we just got. For me, though, I'm thinking this might be one that I might have to scratch because I think that there's a good chance that later in the day they attack these highs again. But is it going to happen in the next 30 minutes? Because I got 30 minutes. I just feel the I thought Eric had made a new comment, but he had not. I guess one thing that we should note is that they did say something about, we might continue to raise interest rates like on Monday, right? I don't think that's what triggered that whole avalanche of stuff yesterday, but it did happen. I think for me, the thing that at the end of it all, because it was kind of acting like maybe there was a news driver or something like that, but it looks like there wasn't. So based on that, I think that the key tell there was that they bought the treasuries up first extremely aggressively long before they started selling the equities. And that is classic when they are going for the risk off play in equities. So they will buy the treasuries first and then sell the equities. Because if you start selling the equities first, then the price that you end up for the treasuries, like the correlation moves the treasuries, and then you end up buying the treasuries way higher. So you get better execution if you do the treasuries first. You move the treasuries and the S&P 500 doesn't seem to react as much to it. Versus the treasuries reacting to the equities. That makes sense? Like if there's a big move in the treasuries, the S&P 500 might not care. But if there's a big move in the S&P 500, the treasuries tend to react. So the order of operations for an execution, if you're going to move money from equities to treasuries, is get a bunch of borrowed money, buy the treasuries with that borrowed money, then sell the equities and pay it back. Okay, well they got to the 15.5 pretty okay. It looks like there's an iceberg there. And do we get the 10? Only 2 contracts there. In the micro. At 3773. I'm kind of interested to see if they keep pushing, but I just want to look at that. Okay, so that's clear. So now I can say, okay, I would at least get the smallest winner that I would be willing to take there. Now I can kind of celebrate a little bit Because like when we took that trade, what were we seeing necessarily that said that like it was going to continue to go up? Well, we were getting a pullback. I guess you could call it like that it was going to be a bull flag. But how did you know it was going to be a bull flag? Well, only because we knew what the piece of news was and that we were likely to continue to see follow-up flows to it. And that's the only reason. That said, it doesn't look like we got the best spots. They're still kind of toying with us in terms of like, you know, being able to take a profit. They might test us again. So that maybe, you know, it may end up being that I should have just taken the 10. That would be awfully frustrating if that's the case. There is some volume going off there at 15. That's kind of interesting because I thought that, well, okay, it looks like that they did trade 16, but that they weren't able to go bid at 16. So you're always going to see a lot of liquidity at 16 and some interesting behavior. Like they like to toy around with that price where it's like, oh, okay, we're going to go, never mind, back to 16. Never mind, back to, you know, they'll do that a lot. So for them to like bounce off of 16 is a little funny. But that's the sort of frustrating game they play with. I'm kind of looking for them to get to the 16 and hold it there. Lex Friedman, I would love to do a podcast with Kamala Harris and Tim Waltz. I think it would be a great conversation. Good luck with that one, Lex. Harris ain't giving out many interviews, and you're probably the last person on the list of people that they would give one to. Right? They're going to go and find friendly media. Or like big mainstream audiences. Well, a few ticks pullback there, but the deltas still look okay, so I think I should be holding it. Oh, it's only been like, what, another 10 minutes? It's 8:30 now. 8:30 my time. Yeah, that's still able to pass through this range too easily. Like again, it's from like the 12 to the 15. They can just trade through that at will. 500 contracts to take a bid, 14 count. Not a strong bid yet. Want to see over 2,000 before I'm kind of like, okay, maybe we might start to eat into it. Do you use prop firms? No, I don't. I started out with prop firms, and you know, I guess I had fun with that. I had some periods where it was like I would have passed it, but like it was split up between combines and all of that sort of a thing. And like my end conclusion was, I'm looking for I don't want to take on as much risk as they want, and I'm looking for way more steady, consistent profits than they're looking for. And then micro contracts came out. And so I just started trading my own account with micro contracts. And that's been a way better deal for me. I'm not going to say like you shouldn't do combines, but I do think you need to understand what they're doing, what they're appropriate for. They are looking for, hit it big yellow kind of strategies. Now, there's some shenanigans going on with these prop firms too, where like people have payouts and they have all of these reasons where they can deny the payouts. So I would say this: any prop firm that has any kind of fuzzy parameters for whether or not you can take a payout, you should avoid. So I forget who it is, and I don't really care who it is. But if they come in and they say, well, you have to prove that you're not doing multiple accounts and like there's a real strategy behind what you're doing and all of that sort of stuff before we give you the payout, don't use them. Straight up, don't use them, because basically what happens is all of those parameters are set up there so that they have an excuse when they don't pay you, when really the reality is they just don't want to pay you. And that gives them enough of fuzz to be able to say whatever they want. It's kind of like when you're at work and they put you on a performance improvement plan and you think, oh, well, I'll go through the performance improvement plan and everything will be fine, right? No, because then you get to the end of it and you find out that the parameters and everything were all kind of set up for them to be able to say whatever they wanted at the end. And really, they just wanted to get rid of it. Fine. It's like that. Don't play those games. How do they pay if you are good question. That's another thing. If you get funded, you should be trading a live account. If you get funded and you are not trading a live account, that is a bucket shop. Straight up. I mean, I'm using pretty strong language here, but I hope that at some point there's a court case on this, because I think if you get funded and you're still trading sim after being funded, granted, I can understand if there's like multiple levels, like you get funded and then you're on some sort of a probationary account and you have to do so well on the probationary account before you get the live account. Okay. But like once you've passed, you need to be well, and if the probation account is like they'll pay you out on that one, then that's a bucket shop. That's a bucket shop. Like once you get funded and you're supposed to be able to get payouts, it needs to be live. If it's not live, it's a bucket shop. Why do we have rules against bucket shops? Is it just because they are exploitative? No, it's not just because they're exploitative. It's because what they're doing is they're relying on people failing, and they're not actually trading or hedging in the market. And so eventually it's inevitable that they will get to a point where they can't pay people what they're owed. So don't do a bucket shop. And a lot of these are bucket shops. Yep, it comes from their own pocket, and that's why they're reluctant to pay. It's true. It's true. Yeah, Earn to Trade appears to offer real live accounts, unlike firms like Apex that allow only simulate. And it does seem to me Apex is the one that I'm hearing people complain about. Yes. I've avoided prop firms because they often try to find reasons to deny payouts if they don't profit from your success. However, Earn to Trade is making me reconsider. Well, my understanding is that Top Step, the original, is, good on those sorts of things. I think that when you get funded, that there is like a interim period. Like you have to pass the combine twice, which is a different thing. But it's better than, oh, you're funded, except for actually it's not a live account. We didn't tell you that, but it was hidden in the documents that you signed. So sketch. And again, they're bucket shops. Like, there's a reason bucket shops are illegal. It's not just because they're exploitative. It's because eventually they can't pay out. What they could do is they could say, okay, this guy is taking a trade. And we're going to hedge on this trade by taking the same position in the market so that we can pay him if he makes money on it. But then at that point, why wouldn't you just let his orders go out to the market? Right? Ask yourselves that. Why wouldn't they just let those orders go out to the market? Because they don't actually make money from you trading. They make money from you losing. What incentives do they have to help you become a successful trader if they make money from you losing? They have none. That's why everything is designed for them, is designed to push you towards risky strategies that work well in the short term, but overall are just enough success for you to think that like you're a god trader and that's going to be your life now, and then when you lose the account you just keep trying to get it back, right? Or next time, let's do 3 or 4 combines all at the same time. Pay 4 times as much. I really honestly, the conspiracy theory inside of me, this conspiracy theory mind inside of me says that combines are behind people saying, oh, you should start multiple accounts. Well, what's the point of props? Well, Stefan, the reason it started was because back in the day, there weren't micro contracts. And so in order to really participate in the markets, you had to be risking a minimum of $50 on a trade. And for most, even middle-class people, that is just too much risk for day trading. So what the CME did is they created micro futures, and they created micro treasury yield futures, which like moved like $10 at a time, maybe. Now all of a sudden, trading is something that's realistic. Granted, that's not going to pay like your transaction or your data fees and all of that, but you can trade it and continue to trade the account without constantly worrying about having to flow out. Right? When they did that, in my opinion, the real original reason that combines were made is basically gone. Then at that point, the only legit reason I think that the combines have is if you're YOLOing, you're doing something that you think will make money in the short term, but you're not willing to risk your money with it because you know that the chances of it blowing up are high. Then you do it on a combine. Combine allows you to take more risk. The thing that I think is so funny is that you'll get these guys that will do the combine and they'll hit it big, and they'll take some payouts and everything, and then they blow out on the combine, and now they're like back to square one. And I'm like, okay, like if you made $100,000, why did you not just completely cash out and start your own account at that point? Because now with $100,000, now you can hit big on your own account, except for like take less risk and be more consistent. Right? Like, people fall for it though. Seeing something go. Oh, well, we had the oil numbers, didn't we? So, oh, there's something else. Apparently, the OPEC is coming to some decision about an output cut, perhaps? Because it must have been a cut. I didn't completely hear it, but oil is moving up pretty aggressively there. 70 cents so far. Oh, OPEC is close to an agreement on delaying supply hike, says delegate. Gotcha. Delaying supply hike, that makes sense. Okay, well, I'm still kind of getting these signs that like the market is able to just really move around here. It looks a little bit stuck in the mud at 14. I feel like that if we were really going to get longer term players come in and push this on a second leg, that we should start seeing it now by this point. Apparently, they're saying that Harker is going to retire in June of next year. What I just heard on the news box. That's not going to be a market moving event, but something that we need to remember, because that's probably going to affect the market reactions. All right, well, I've got 10 minutes left, and I'm not liking the way this is turning. So maybe I should just try to scratch this, and then they'll go and make the move without me. This is probably what happens. If they're allowing you to draw down only 4% on a $100,000 account, they're effectively only giving you $4,000 to trade with. You might as well use your own cash. Yeah. But I mean, being able to draw down $4,000 is a lot. Like you can take on a lot of risk with one contract and $4,000 of risk. That's the thing. It's enough to do degenerate stuff and pass the combine is what I'm saying. Like, if you want to pass a combine, just do degenerate stuff. Double down on your losing trades. Have targets that are way closer than your stops. Really go for like big hitters. You know, like maybe even be in during a news event. Well, they're down a tick or two, but it's turning really quiet in the treasuries here, actually. Yeah, if you don't have 4K to put down, then paying $140 for a funded account makes sense. Yes, but again, it's for taking on more risk and YOLOing, right? Like, if you do that and you pay $150 a month, let's just say $150 to make calculations easy, but it takes you 2 months to pass the combine. So $300 per attempt, and then by random chance you have to do it 3 times. Now you've spent $1,200 on combines when you could have put $1,200 into a trading account, traded it smaller, and kept saving. Right? That's weird. Micro's moving there and the main treasury did not. Well, there's 2 upticks. so I scratched it at break even. I was looking at that, I was like, okay, that's going up, so I can wait for this next kind of flow or run and see if I get anything from that. But then like it immediately ticked it back down, so I decided to scratch it. There's still a chance that over the next hour that we do end up seeing a flow that takes us higher. Oh, you know what? By the way, I had this sim trade. Let's just end the sim trade. But you know, I was looking for it to move higher within that hour, and it didn't happen. So I think that it was an okay trade because we broke even on it, but ultimately what I wanted to happen didn't happen. I might have been able to have made $10, but it was only like very, very brief. I would have had to have had the limit order in. So let's just see. We got 5 minutes left. Maybe now it goes. And what did I get, by the way? I was at 8-1, 8-3. Oh, well, there's already a pretty good little ticker, too. Like I said, I get out, and now it's going to go, right? Yeah, that one last little one lot was all that they needed to say, okay, now we need to move up to get some more liquidity. Eric Wallerstein, Jolts quits/hires has dropped to the same level as December 2023. Remember, these are seasonally adjusted. And before that, March of 2021, continuing to cool, what you'd expect and hope for in a soft landing does not spell recession. Wow. I'm not going to read that one, but I was impressed by that tweet. It's too political. Downtick again. Maybe not. Maybe not. I could have gotten like a tick or two though. Could have paid for my commission. Oh well. Well, you know what though? I took a risk. I'm happy that I took a risk because yesterday, after all of that, I was kind of like, again, I was too risk adverse. I should have messed with that. I should have taken some longs in there, and I wouldn't have made as much as I probably should have, but I probably could have eked out 10 or 20 bucks out of there and been happy with it, right? So mark my words, if Kamala Harris wins, Republicans will attempt to disenfranchise female voters in the next 5 to 10 years. There is a point at which one side of the aisle might try and disenfranchise, but it wouldn't be just because Harris wins. I'm sure that'll be a fun thread. Still watching it. just kind of trying to confirm my belief that it has just died down and that there's not another flow lurking. Bitcoin is being funny again. Oh yeah. You're right. That was a pretty good jump there today, isn't it? How much you want to bet that Tether printed again? Yeah. Have you seen this study that are like the most attractive and most unattractive hobbies to women? And like the most attractive hobby to women was reading, and like the least attractive ones were like video games and arguing online. I'm like, well, I'm fucked, aren't I? Because arguing online and video games are my two favoriteest things in the world. I do woodworking though, so like. And crypto was on that worst list as well. Well, I don't see anything yet about any prints or anything. That'd be something to look out for. Is maybe today you get information that there is a tether. Almost always when I see a ramp like that, they printed some money. Looks like they're already taking a breather. You know, interestingly enough, the Japanese yen is at its highs. So the treasury's not quite following along. The treasury is being difficult for us, unfortunately. Again, the issue here was I thought I saw the hole. I took, you know, the risk there. If I had waited a little bit, I would have seen that the hole was quite a bit larger than I anticipated. And I could have gotten, if I had gotten in closer to the bottom of the hole, I probably could have made a good profit off. Yeah, the biggest turnoff to women was gambling. Where is it? Well, it's time for me to get going. Maybe we can talk about it tomorrow. Manosphere, gambling, and porn arguing online. Those were the biggest ones. And then Funko. Well, who does Funko? I don't know. Whatever. Clubbing, that one's kind of funny. But that might be a function of the group that you asked. It's like nobody does clubbing anymore. All right, guys. Well, let's come in here and change the title. Job openings this big. All right, guys. Time for me to get going. I will see you tomorrow. Stay excellent.